The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We've got a lot of things to talk about today. A lot of things have occurred over the weekend, not including the weather that we have across the United States, as global warming has been put on the sidelines for at least 3 days. Okay, now the first thing we take a look at is the German DAX and also the FTSE. You'll notice both of those have not skyrocketed into new high ground. Folks, most of this stuff that occurred on Friday was related to what was happening in Hong Kong and China with the IPO market is going absolutely crazy. I mean, it's almost like our dot-com bubble revisited, but that gives the incentive for people to come in and buying. And of course, we were up again Sunday night and again Monday night, and here we are up again on Tuesday. And that leads us to where I want to talk about the stocks in just a moment. But before we get to that, I wanted to share with you a couple things about these things that are happening with Read It. And here is a post that was given to us by one of our friends over in Singapore, and he wanted to know if he should be buying the silver. You're seeing this is Robert Kiyosaki. I think that was Rich Dad, Poor Dad. Arthur, and he's a friend of Elon Musk, and he's pumping on Read It, the silver, to be a buyer of silver. And the first thing I did was I looked at the silver chart, and I said, you can't be really bullish on this silver chart because it really is going to have a lot of resistance at $28 an ounce. And then I looked at the gold chart at 1826, and my gosh, it was a perfect Gartley pattern, and I immediately sent out yesterday a sell signal on the gold at 1826. We're now at 1794, and I think that, and the silver's dropped $1. So you've got to be extremely careful when you watch these things that are going on, because there could have been a big following by Kiyosaki or Kimasabi, which was it? Kiyosaki. And I met that guy once at our Tony Robbins seminar. Oh my God, 30-some years ago. Anyway, if they're going to start following through, you've got to be extremely careful. That's very important what's going on with these things. We have another situation here on Reddit that happened on Friday. Let's get this up here. Take a quick look at it. This is the one. Here goes the one that looks at this is Reddit, and it's talking about buying the oil. Oil was going to go to $100 a barrel, folks, because of the cold weather. Well, if you know anything about Texas, it's a pretty big place. If the sun is ris and the sun is set, you ain't out of Texas yet. I can tell you it's a very, very big state, and it is not always going to follow along with what the weather patterns are. This happens to be a very unusual storm, a big ice storm, and it might last a long time. But the thing that's going on, folks, is the market is not responding to what the news is. For heaven's sakes, all you had to do was to look at the crude oil. We were talking about the crude oil. Here's where it was. I want to bring this up to you because this is where we were Friday, and I sent a video out on this early Sunday morning. But we went up to 61 and change in the market. Now we're now trading at 50. We're down $2 a barrel in the midst of the most bullish news that you can get for weather. With the thing, they've closed down the refineries. There's not going to be any more gasoline. There's not going to be any more heating oil. Are you kidding me? People are believing this. So that's where the charts will help you, because if the market's not acting with what the charts are telling you, that's a totally different thing. And that's one of the reasons why you want to watch what market action is telling you about. That's a primary thing to pay very, very close attention to. So I think it's important. Now let's get to the nitty gritty here, the stock market. Okay. This is the E-mini S&P, what we were looking at. We had a very nice profit in that for a couple days. It didn't turn out the way. We had our stop at break even at 39.24. And of course, on the close on Friday, they really gunned it. And open interest dropped again on It did it both on Tuesday. Excuse me. It did it both on Friday and again on Thursday. So both of those days, open interest has dropped. That's not a good sign. The open interest in the NASDAQ was up slightly, but the open interest in the Russell basically unchanged. Open interest in the Dow Jones Industrial Average basically unchanged. So that's it. Yes, I know we're talking in the den here about the bullishness in the natural gas. We've been very bullish for that for quite some time. We've made the profit objective now in the natural gas. So I think it's important that you want to at least book some of the profits up in here, because this is the kind of thing that you get when you're having these things moving around. So I think it's very, very important that you do that. Let's get this natural gas one up so we can see it. I didn't include that one today. Oh, no, I didn't. Okay, let's move on to the others here that I did. I want to talk a little bit about stocks. It's going to take me more than a few minutes, I think, to do it, because we're over such a significant thing. Here's where we were. I sent this out to Tommy Hugard on Saturday. He was asking me about the relationships between what we're looking at now and where we were in 2009 here. And yeah, March natural gas is 320. We were looking at 308 as the target, Bob. And with this emotionalism with the gas and stuff, with the crude oil and the other stuff going up, but the crude oil is not going up that much. The others are. But natural gas is for the people that are out in the boondocks. That's how they get their heat, and that's a totally different market. But that's been bullish for quite some time. So I wouldn't be trying to pick a top up in here at 320, even though it could happen. I don't see any reason to get involved with that. But let's take a quick look here at the. This is the Bradley model going back to March of 2009. This is what we're looking at now is an inverted Bradley. It's going straight up and straight down, but we've got a major turn here because of all these planets that are occurring. But you'll notice here we bottomed on the 5th, and we made a double bottom again on the 9th. And that's the time where I said we're going to have the biggest rally in stocks since 1938, and it certainly it's still rallying, so it's been way past 1938. But some of these patterns that we're looking at here, let's just look at the Russell here, because it hasn't broken any of the patterns that it's a divergence then between the Russell and you'll see here that it's got up to 2,300, but it still hasn't broken into new high ground. If we look at the Dow Jones Industrial Average here, you'll be able to take a quick look at this, and you'll see where we are here with the Dow Jones Industrial Average. That measures to the expansion on that takes you right at 31,800, I believe, somewhere in that ballpark. It's very, very close to taking a look at this. So we'll see. Now, hey, look, maybe this crude oil is going to turn around and run up and be up $3 or $4 today. I don't know. All I'm doing is responding to what the news is telling us, to what the prices are telling us. And the crude oil market, folks, is a huge market. You can't play games with that one. Just like the Read It boys are trying to play games in the silver market, you better be careful over there, because there's a lot of big players. Okay, we'll be right back, and I want to share a couple more insights of 2009. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the natural gas. As you can see here, we've accelerated way past that target level we were looking at, which was 308. And believe me, folks, that's where I say good luck to you on the rest of your positions, because I have made the position that when it gets to that level, this is where I came to play. And I know I'm leaving a bunch on the table, but by golly, that's what you have to do. And that's what I'm watching here this morning. It may be right, may be wrong, but we'll have to take a look at this. But anyway, let's get back to this stock market thing that I wanted to mention to you, because I always try to see what I potentially did wrong. One of the things I did here was to look at take a look at this 2009 low here. And remember, lows are easier to pick than highs, folks, because lows are related to fear, and fear is a greater emotion than greed. And you can see here the big ABCD pattern, similar to this is a weekly chart too, by the way. So you can see the double bottom that we had on the 5th of May and then again on the 9th of May. And then we're going to see whether that's going to mean anything. These are really big cycles. They might not work, but I'll be certainly surprised. But I'm surprised often, but never in doubt. So we'll watch that very, very closely. Now, regarding the gold market, I've got to finish the stock market one, folks. Give me a break here on the stock market one, because here is the NASDAQ. I wanted to get this up to you here to show you that the NASDAQ here is we had an ABCD pattern forming here at 13,857. That's what we hit on Sunday night, but we went all the way up to 13,900. We didn't quite make 14,000. We made 13,900 on that ABCD, but we're up. This will be the 11th day in a row without a major correction. So that in itself makes it very, very overbought. But that doesn't mean anything. This thing hasn't turned down now, folks. Once we went above that 39.24, the schedule of what you had to risk to see if you were right totally changed. And so you've got to be extremely careful. That's the main thing. I know we've had a couple questions about the platinum. We'll get platinum up here. Sent this out yesterday when it was happening. This is the same time we were talking about the silver and the gold markets. But you'll notice here on the platinum, if you take the high in January to the low in March and multiply that times 1.618, it gives you a 1.618 expansion of 13.41 per ounce. The high was 1348, and believe me, folks, it didn't spend more than a half a second up there because it was bada bing, bada boom. We've now dropped more than $50 an ounce here in platinum, so that should be a pretty significant top up here in the platinum market. So those are just a few of the things that we were seeing last night. And there were a lot of things going on, folks. If we take a look here, because of the fact that we've been talking about this pattern in the just give me 1 second here, in the crude oil market on that monthly chart, if you'll remember here, what did I do with it? Well, we'll do it on the heating oil because it's the same chart. Get this up here, you'll be able to see it. But we have this potential long-term 135 pattern. This is the weekly on the heating oil. Now, we got up to that higher level of that 182, 183, which is certainly in the ballpark. But you can see the weekly ABCD pattern that you had here, just really spot on. And the news is verifying, what the market's actually doing. So just remind ourselves that you got to follow what the charts are telling you. So if the news is really bullish and the market is not acting that way, you got to be very, very careful because the news follows the trend, and by golly, it can change in a heartbeat over there, and then you'd have some serious things to look at. Now, regarding the Russell, I want to bring this up to you now. This is the shorter term. This just goes back over the last couple months in the Russell because we are getting this up here because I want to make sure I get the chart hip. Oh, I got a slight problem here, boys and girls. Give me a second so I can get this done. There we go. Okay, here's the Russell. The ABCD on this measures to 2293. We're above 20. We went above 2300. But again, it's a big ABCD pattern, and that's what we look at when we're watching these things. So we have to pay very, very close attention to these as we look through. Now, we're having a huge move here in the U.S. dollar this morning, folks. The spike, we had a little spike in the euro, and then she rolled over and dropped about 80 pips really quick. Something really big happened with support in the U.S. dollar today, folks. Whether that'll have any ramifications on the Treasury bonds, I'm not sure. But looks like we're heading to 160 in the Treasury bonds. I mean, this is negative interest rates reversed because rates are going to go higher. Now, I saw a mortgage rate on the TV the other day, a 30-year mortgage rate for 2.4%. Man, that's a heck of a rate. That's really something to pay attention to. So the foreign currency markets are going to be rocking and rolling here. And one of the ones that we've had on our list for a very, very long time, and that is the British pound. If you take a look at this long-term picture of the British pound, this is going back over the last just about 9 months. You'll notice the target zone on this is between 140 and 140.70, and we hit 139.80 last night, and we've dropped about 150 pips off that, so that might be very, very important. That was the 1.618 expansion at 139.80, and we're down about 120 pips from that level. So something big is happening with foreign exchange, folks. That's why we like it so much, is because you get such really, really nice patterns, and that's and they're so tradable because it's such a huge market. You don't get the gyrations that you get in the NASDAQ and the S&P because these markets are trillion-dollar markets, not billion-dollar markets. These are really big ones, and you just got to love it. Here is this long-term picture in the British pound. Now, this is going back 17 years, but it was sent to us by our friends across the pond over there. And when we get back from the break, I've got a special chart to show you that from my good friend, Mr. AZ over in the UK, and I think you're going to really like it. It's all about technical analysis, and it was something that he's been watching for a very long time, and I think you'll enjoy seeing it when you take a look at it. It has to do with Dr. Alan Andrews' old work on oh dear, I can't remember what that thing was called. Anyway, I'll post that chart after we get back from the break, so we'll be able to talk about the pitchforks pattern. Alan Andrews. I met Alan Andrews in Florida many, many years ago. I'm talking 40 years ago. I went down to see him, and he was a retired physician, as I recall. Didn't do much trading, but did a lot of research, and his work is now put on a lot of the different programs to look at. It's basically showing harmony and and repetition and stuff like that. So it does have some really good applications, and I think when you see the one that I'll show you here coming up at the break, I think you'll enjoy taking a look at it because it's happening right now. And whether that does affect what you're going to be doing or not, I'm not sure. But let's pay attention. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted this chart going back 30 years, 32 years actually. You'll notice point A there. That was the market crash, believe it or not, of 1987, the two-day crash. Well, the crash was 2 days, but it had been going down for 6 weeks. The market made the actual bottom on October 20th. That was point A. If you'll look at point B, that was the top of the dot-com bubble. That was in early March of 2000. The Dow Jones had topped in January of that year. We went all the way down to point C. Then we went up again until the real estate problem that we had in 07, 08. You notice we came down when we made the 150% of that move, which was BC. When you see those little yellow boxes, folks, those are just about spot on, perfect hits. And then we'll notice here that in 2019 we had the big sell-off. You'll be able to see that one here. And then we made the 25% of BC, and then we completed this one. The green one up here is the 200% of the BC move, and it should be within 20 points of the 39.20 level. And of course, we hit 39.59 in the S&P 500 futures. I'm not sure, what the cash is based on, but this is based on the cash chart. So it could be interesting up in here. But the thing is, we were expecting to see it top on the 11th or 12th. It didn't do that, and it's gone a few days past. So this is either a total melt up, is what we're going to be seeing, which is certainly a possibility. Or there's a possibility that we're going to be looking at a picture of a market that is just going to keep going and going and going and going. And it might do that because this happened in years before. Remember, we've been going straight up since 09, folks, with some pretty good corrections. But this is the 12th year of this move, so it's going to be interesting to take a look at it. Someone's asked me to review the gold market. I'll get this up here. This is what we were looking at last Friday. If you'll remember, we sent that head and shoulders pattern across the tubes here to let you take a look at it. I marked that red box up there. You can see that. You can see easily the head and shoulders pattern, just perfectly symmetrical, as you can see. The market broke down and we rallied up on Friday to the 1830 level, and then we went sideways here all weekend long. And then last night we hit 1826. That was the alert that I sent out saying it looks like we're getting ready to go down. And there's the ABCD structure we were looking at coming in around 1785. If we get to that level, that's what we're watching now. So if you happen to be in that one, make sure you lower your stops as it goes down so that you protect the profit, because these things could react very, very quickly to the other side of the tube, and that would make it interesting to watch how these things are coming up. If you have any questions, folks, it's 877-927-6648. I think it's going to be an exciting next few months, folks. Actually, the VIX is up today, folks. Can you believe that? I mean, when I saw that on Bloomberg, I thought it was a mistake, but they are taking some protection and volatility. But we'll do one thing at a time as we look at some of these other things that we're paying close attention to. To me, what happened over the weekend with the cold weather and the fact that the crude oil didn't react very well to it, at least not yet. Maybe it'll react to it later today. But for it to drop $2 a barrel with that really bullish news, I mean, it was really cold down there, folks. I mean, they have people, 3.5 million people in Texas that don't have power. And that's a really tough thing to try to get through. By the way, the silver is now down more than $1 an ounce from when the read it things went out this morning. So the people that did that are, the good part is the options market's not open at that time. So if they were doing anything, they had to do it in the futures and the mini futures, and that at least that protects them a little bit. But these things are a little bit crazy. I did get a really, really cool post from Rich Anderson. And this is from, this is from one of the guys. Let's get this up here so you can read it. This is really about the mental part of trading, folks. It says, I once had an exceptional wizard investor tell me the best traders don't just accept their mistakes. They delight in their ability to react quickly and change course. Lose your opinion instead of your money, as Paul Tudor Jones says. The 3 rules to summarize: aspire to be truthful in your perspective, be humble in your convictions, and be flexible in your positions. See the chart, believe the chart, act upon the chart. And as I've always said, trade what you see, not what you think, because it's not what you think, it's how you think. And that's the whole key of looking at it. That's why when that market went above 39.24 on Friday, I wanted nothing to do with it. I'll have something to do with it maybe at a later date. But it went above there. I said, uh-oh, something's not right. And so you got to stand aside. Platinum, that was right? Crude oil, that one was right. Gold was right, but not the stock market. So you got to, do the one that, lines up the best that you can find. So just patterns is all it is. There's nothing more than that. And we're just trying to do one thing at a time of looking at it. Now, let's just take a look here at this U.S. dollar index, folks, because I want you to see what happened here this morning in the dollar index. If this was as of Friday, you'll notice we hit the low there at 90. And folks, I don't know if you've been looking at the dollar index today, but it is smoking, and I'm not joking. That thing, I think it ran about 80 pips. We dropped about 100 pips in the to see what's going on. Anyway, that's why we're keeping a close eye on some of these things. We're going to try to have Rich Anderson on tomorrow as our guest because this cold weather affects the grain markets. The grain markets were very strong here on Monday night because of the fact that we had a cold weather. Cold weather causes the animals to eat more. Eating more means they want more soybean meal and more corn and more wheat and all the other stuff. So those were strong too. They were acting relatively good to the weather market. So we'll see whether that's going to continue, through the rest of the week. And the weather was supposedly start to break around Wednesday and Thursday. I saw a little weather bit on Bloomberg early this morning that's what we were looking at. Now, I wanted to share another chart from Martin Prink. Martin's been around for a very long time. He's one of the, old-timers, along with myself and John Murphy and a whole bunch of others. But take a look at this chart here. What he's trying to show you here is the fact that you'll notice look what happened to the overbought situations, over the past 6 or 7 months. Look, see, the market is overbought and it keeps going up and up and up and up and up. That's what you have to be careful of, folks. That's why if you're going to use oscillators and stuff like that, make sure you get confirmation along with the bar chart or with the pattern, because that'll give you an edge that you can, use something. But look, you can stay overbought in this darn thing for 2-3 years. Look at this. Look at the overbought situation all during 2018, 2019, 2020. If you'd have traded off those, every single one of those would have not ended very nicely. So that's the main thing to try to remember. These things are only working when they line up with what your trading psychology is. And what we watch for is ABCDs. When they go beyond 1.618, boys and girls, that's a danger sign. That's that guy standing on the freeway with his little yellow flag saying, please slow down, please slow down. And that's what happens. And we're seeing that here today in the natural gas in a big way. So that's it. Anyway, that trade for us, folks, is flat out over. We've been waiting for this to happen. It's happened, and by golly, maybe it's reduced to the weather, but it was a really big, really big move here. Seeing what's going on here, we got the.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, hold on here a second. We've had a little bit of a 60-cent rally here in the crude oil. I'm going to give you my 2 cents worth. I'm reading the old Jesse Livermore book for many years. I think I read that book at least 50 times, and I wanted to bring this up to let you see what's happening. Here is the crude oil market as it was going on Sunday night. If you notice that little red box there on Sunday night, that's when you had the big gap up. We went from 59.50 all the way up to 6100. Then we came all the way down to 59.40 today. And that filled that gap that was there from Sunday night. Look, we had a nice little rally. Now, this rally is the important thing, folks, because this is the most important rally that we've had since the market topped on February the 14th, 2 days ago. Now, look where it stopped. It stopped right at $60 a barrel. And as long as we don't get above $60 a barrel, folks, you have to consider this as a potential rally in a bear market from a shorter-term perspective. Now, remember, this is a shorter-term perspective. If you're looking at, weekly charts or something like that, then maybe you got to change your mind. But frankly, this is what we're keeping an eye on. That's the main thing to keep watching. So I think it's important enough to watch that level of $60 per barrel. So because we start getting above 60.50 or something like that, that tells us that market is probably not finished yet. And we're going to do, yes, Maria, I did cover gold, but for you, I will cover it again. We were looking for this 1 second here. We were talking about this over the weekend, and I'll bring you the two charts that we had here. Last night, Maria, when you got your 24/7 video, we were trading at 1825. At that point, we were making a perfect Gartley pattern, and right at the 61% retracement, the risk there was about $4. And we've had a big move down based on that, and I'll bring that one up to you so you can take a watch it closely too, because I think it shows how this technical analysis stuff works. It doesn't work all the time, but put it up here to be able to see it again. That's what we're looking at, right around 1785. But we're getting, folks, we're below 1800, and we said that over the weekend. We thought we were going to get that, and here we got new lows in gold. And look at platinum. Platinum hit 1348 today, folks. The 1.618 expansion on that puppy was 1341, so that's a huge move. So we'll watch that as these things unfold here today. Okay, now I needed to cover a couple other little things about the hold on, I brought this British pound thing that we're looking at here. So I'll be very, very careful. By the way, the chart that I posted with Andrew's pitchforks, that comes from our friends over the UK, Mr. AZ, and he is definitely one of the real premier people in the market. He does a lot of things with spiral, folks, but he doesn't like to share those because they're very difficult to understand. But with the pitchforks, it's very simple to see the harmony that's there. You can see the way the market expands. And this is long-term, folks. This went back about 12 years. Hold on here. I think we have a lucky caller calling in today, maybe or maybe not. Gap tires up with 13.95. Yeah. Okay. Okay. Oh, Mr. Z is saying the Chicago Board of Trade. Oh, beans gap tired at 13.94. And it looks like they got $14 written on those beans. With the weather being cold, folks, these animals, as Mr. Z knows, they have to have protein, and that's where your soybean meal comes in. And that's going to be a difficult one to look at. That's why we're going to have Rich Anderson on tomorrow and talk about the cold weather that's happening, because that affects all of us for, because some of these animals are not going to make it through. It means the supply is going to go down, plus it's going to cost more to feed them. So we're looking at higher prices for food down the road here. I'm a meat person, and when I see the prices of what meat is, my favorite cut of meat is a tri-tip, a triangular tip sirloin, and it's gone from $22 to $47 at the butcher shop that I go to, and I get 5 meals out of that. But that's still a big increase. It's about 125% increase in meat over the past 6 months or so. So those are just a few of the things that we're keeping an eye on here this morning. So that's what we're watching. Let's move on to any other questions that anybody had. Someone had a question about the long-term perspective of the commodities. Folks, this thing had a major bottom a year or so ago. We pointed that out when corn was at, 240 or whatever it was, 250, 260. I mean, it was some ridiculously low price. And some others have, had big moves. But now we're in the end stages of some of these things with spikes like you're seeing in platinum and natural gas, and even in crude oil, heating oil, and gasoline. They're all doing the same type of things, and they're doing it in unison. So that just means to me that there's something really big happening right now, and we're seeing it in the stock market possibly, because it just keeps going up and up and up. And if you've seen what's happening to Hong Kong, I mean, it had a tremendous day before the holiday last week, and then it gapped up huge on Monday when the holiday was over, and it just continued to run and run. And the same thing with the Nikkei, folks. The Nikkei reached a high of above 30,000. The old high of the Nikkei was on December the 29th of 1989. It topped at just under 40,000, 39.9 something. And they were talking about it in the Japanese papers at 40,000, and it never got there, just like we had the same what's happening with the dot-com bubble. Okay, question about, let me get this crude oil or the Bitcoin up here. I don't like to talk about this because I know so little about it, but here's Bitcoin. It's in the news now. You can see we're within a heartbeat of the 40,000 level, folks. If you see the ABCD, you can see the 382 retracement there at 3810. 28,010. That takes that target to 67,000, and that's it. So that's it. The bonds are in trouble. I think we're getting close to some minor support down in here, folks, but we have been talking about this bond market for a long time, and it has not looked good for a long time. And believe me, it doesn't look like it wants to, to do anything other than go down a little bit more. As you can see here, we thought we were going to break. Let's get this up here so you folks can take a look at it. We thought we would at least get to the 6,400 level, and look at this. We're below it today, folks. We've broken through that 1.618 at 165 now, and we just made that big ABCD down there at 164.20. So that if ever there was a market that was oversold, this is one of them. So whether that'll mean anything, or I don't know, we'll have to take a look at that. Someone said that they were looking at NVIDIA over the weekend and the monthly, yearly. Yep. Who knows? I don't know anything about those technical stocks. All I know is that, we've had a head and shoulders pattern in Tesla, and so far that is held. But, I'm just looking at the patterns that you can trade them without risking very much. And that's the whole beauty of what we try to do here, is to keep your losses small so you'll be walking tall. 877-927-6648. We'll be right back, folks, after we pay a few bills for the O'Briens with their new edition, Tommy the 14th. I think the little guy is way over 10 pounds already, so we'll see how he's moving along here. So if you have any questions, folks, 877-927-6648. Uh-oh, did I reach it?
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're taking a look at this dollar index that we posted just a little while ago. You can see here we hit exactly this exact 0.618 retracement, folks, and that gave it a little boost. If we go below there, then that would really be a bad sign if we take out today's low in the dollar index. But we're getting some selling in the British pound, euro, and some of the others. So I think that this is probably going to be at least a short-term bottom here in this US dollar index. That's the kind of things you sort of wait on when you see those numbers that were supposed to come in at those times. So pay very, very close attention to it, I believe. Regarding the crude oil, folks, if we get above 60.50 in the March crude oil, that would be a sign that we're probably going to go up and test those highs again at 6,100 to 6,200 possibly, but that's a little bit early in the day here to take a look at it, because that level of $60.05 a barrel was a very, very important thing to look at. The two most important stocks charts that I posted today, folks, was the one on the Andrews pitchforks showing the S&P up there at that 3920 plus or minus 20 points, and then also showing you the one with the U.S. dollar index hitting the spot market at the 1.618 level. And the third chart, of course, would be the platinum market, which is related to energy and not too much jewelry anymore, but it hit the exact 1.618 on the daily and the weekly at 13,041. The high was 13,048. We're now $60 an ounce under that. So we know that is some type of a significant top in here. So live every day in an attitude of gratitude, and may God bless. And make sure that you take care of your neighbors, folks, because believe me, folks, a lot of people have not had it easy. And so if you can help them with a can of food or some soup or something, take them a meal, whatever you can do, certainly they would appreciate it. So that's it. We're going to have, I think, Basil Chapman is going to be up next. And we'll see you folks on the flip side tomorrow. We'll have Rich Anderson as our guest, where we're going to be talking about cold weather, the animals, and the crude oil market. So live every day in an attitude of gratitude, and may God bless.